For investors in this economic climate, it seems that all that glitters is gold. The cost of the precious metal hit an all-time high on Friday after its 7th consecutive weekly gain. The price of gold has already risen by 14% in August. It's being called a modern-day gold rush and is fueled by the dismal performance of the stock markets across the Asia-Pacific. So investors are looking for safer places to put their money and fleeing the volatile stock exchanges. One of the worst hit is South Korea's Kospi. It dropped more than 6% on Friday, its biggest daily percentage loss since the global financial crisis in 2008. The losers on the Korean exchange were mainly exporters, led by the country's biggest car maker. Hyundai shares fell by 10%. Analysts say the sell-off is due to fears of another global recession and failure to solve the Eurozone financial crisis. And for the same reasons, investors fled the stock markets in Japan, Taiwan, Hong Kong and Australia. By the end of the trading day, about $40 billion was wiped off Sydney's ASX. While oil-related stocks dragged down Hong Kong's exchange as crude oil prices headed for a fourth weekly drop, with fears that demand will decrease as the world's largest economies shrink. Analysts say investors will have to simply accept that the US and European markets may not recover anytime soon.
In the very short term, I think investors are going to be very cautious. Asian currencies and other Asian assets will suffer as a risk asset class. But in the medium term, we still think that the fundamentals in Asia is much stronger than the fundamentals in the US or Europe.
Also causing concern is this. The Shanghai Composite Index suffered its 5th straight weekly loss. In 2009, soon after the financial crisis began, the global economy had relied on China to help with the recovery. But now China is suffering its own problems. Its growth is expected to be affected by a slowdown in exports and high inflation. So for now, it seems the only safe investment is gold. Divya, Gopalan, Al Jazeera.